following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this, I should know it by 20th day of April. And pleasure to be here. Of course, you had wonderful hosts going all the way through from 8 o'clock this morning until, so that started off with John Logan giving what should be a fantastic workshop this afternoon at 5:30. Check the front page of TFNN, all the details are there. Then of course, Larry Pesavento with his usual terrific guests that he has, as well, of course, with the analysis that Larry can give. Really terrific information, and love that. And of course, we got Tom and Tommy, the duet between them, the way they play it with a different analysis methodology. It's really fascinating watching father and son. And you can feel how the respect they have for one another. Tom with his experience, and Tommy having garnered experience watching his father, and also with his own acumen, developing his own techniques. Very, very methodical, very thoughtful in his approach. I like that. So just terrific analysis. Here we are. Dow's up 21 at 18,074. S&P is up 0.32 at 2001. The comp index is up 8 at 49.48. You've got, this is very interesting. See the E-minis right now up 125, made a peak D2 at 209.8.50 yesterday. If there is no new high today, and there's a real struggle to get there. Could it get there? We'll look at that in a moment. Meantime, back at the ranch, look at the spectacular 17% move to the upside, or 16.9 actually, in the weekly chart of the E-mini, the June future. Now, that's a little different to, sort of the same percentage, but a little different in the waveform in the S&P cash, because there was this minor little peak that was made. So it's just an incredible move in one fell swoop to the upside. So we are, of course, getting somewhat extended, but there's an analysis that I'm developing here that says, while we didn't get that pullback that I was anticipating about 4 or 5 days ago, that's still in the cards as a possibility. And then we might, based on the weekly chart, have a lunge towards the all-time highs. Very interesting. Look at the 120-minute chart, peak C1, peak C2, and peak C3. In the 120-minute chart, that's like a top, but what often happens, the magnet of the 2098.50 level is so strong that there's a chance, that, let me just quieten that down there, that there's a chance there will be an attempt, at least an attempt to be made to get to that level later in the day. Now, let's go to the nitty-gritties. Gold has been on an absolute tear. Gold trading right now at 1255.70. I'm a little behind 1255. Yeah, it's at 1255.70, up $1.40. Is attempting to get to a leg D, and that leg D will certainly be just above 1264.70, the high of the 12th of April. Now, if that takes effect, what we'll be seeing is that the weekly chart, 1267, is the 200 period exponential moving average, this orange-colored one, coral-colored one. And if that gets touched, there's a good chance it's going to try for a double top at the 1289 to the high that was made back in January, I think it was, January the 23rd at 1313. I love what's going on here in the way that the dollar has not broken down yet, but it is pulling back. I love the way that this market continuously rotates through different sectors, so that if you keep your eye on the ball, it's very much like juggling. The ball that you're looking at, or they used to have it in New York and Manhattan all the time. They don't have them any for years and years. They haven't had them. Those guys with the little pea pods, and they shuffle them. They got the three. Well, if you're like a politician, if you're watching that left hand, it's the right hand that you really have to be focused on. So what's being said here doesn't necessarily, while I'm doing this, let me see. Okay, thank you, Al. We've got me in the picture. I wanted to show you something. Who's this politician? Oh, sorry, Al, you just moved over. Let's get back to the picture. I just wanted to ask this question. A little quiz, a little enlightenment, a little fun. Here we go. Who is this politician? All right, or that. All right. Who is this politician? I don't know if I can't see it in the picture. I'm not seeing the picture. And who is this politician? Hand movements are what it's all about. So I'm saying to you that the rotational aspect of this market, moving through the breakdown in the commodities, and then the beginning of the year re-entering the commodities with massive performance, avoiding the bank sector, talking about higher interest rates needed to get the bank sector moving. But look at the XLF, which we missed. I want you to get it. We missed it. Nice move up again to up 7 cents at 23.43. I'm calling this leg B in the weekly. I'm calling this leg B in the daily, which says that there should still be enough residual strength for a couple more days. And this is the rotation I'm talking about. We've had, look, General Electric was a leader. It hit 32.05, made a peak F-top on the 31st of March, and then pulls back to 30.50 area, and now has made a leg C in a counter-trend rally. Very small move going from peak A to peak B, and now to leg C. Underneath that previous top, hasn't broken down, but is suggesting that if there is a turn down, you could get this H pattern, and that'll take you time to retest the 30.50, even going a little bit lower as it consolidates fantastic gains, going from the 19 area in August to 32. I mean, that is incredible. But wait a minute. In my Dow Quartet, IBM breaks down. Surely an 8.9 point move to the downside after making a peak D high should have collapsed the market? No. The market said, I've got residual strength. And I'm going to talk about that in a moment. I'm leading to it. So this has gone, this is the lightning bolt, A to B equals C to D, actually an extension, holds the 200 period exponential moving average in IBM trying to rebound. Nice rebound today, up 2.41. But wait a minute. You've got Triple M making an all-time high yesterday, pulling back today from the 116, from the 170.77 high of yesterday, pulling back but holding above the 9-period moving average. A fantastic W formation in the weekly. And you've got UTX stalling a little bit here, having made a recovery high yesterday at 106.29. I'm going to try to put the package together so that we're seeing all the balls tossed in the air and which balls are the most important right now. Basil Chapman, Tiger Technicians Hour.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back. So what I just wanted to do was to repeat what I did before without the camera. I'll do it with the camera now. My question is, in politics, you've always got to look for things. I always look at hand movements and gestures. So who does this? Or even this? All right? Who does this? And who does that? Just watch them, and you'll see when they do those and what it means, and when they repeat it, and what the context is always when they repeat that particular action. And you'll find it quite informative. So in the meantime, back at the ranch, I just wanted to mention that, I love to look at the politics of politics. And I'm very visual, so that's what I noticed. And I was saying that when someone says, look at this, you've got to be looking at that, especially in politics. So here we go. We're looking right now at this chart that I often show, and this shows you, this is only the four. I believe it ends at 4 o'clock. Exactly, was it 4:10? Right there, that's the last trade. Yeah, 4 o'clock. So this is the vertical line right now is the cutoff for the day, and the vertical line then becomes the start of the next day. So I do not have the overnight trading. The green is the SPY, and the red is the USO. You'll see that the report came out at 10:30, and there was a spike and a consolidation and then another spike, and now they're moving in unison once again. So look at the chart. It doesn't happen all the time, but if you look at the gold and the dollar charts, you'll see that the trend, not necessarily the price movement, the trend very often is in counterpoint. There are about 6 weeks a year, maybe twice throughout the year, the 2 6-week periods, where you can get the parallel move between gold and the dollar. And in this case, you're looking at crude oil and the SPY, the S&P 500 trading vehicle, the SPIDER. Okay. When we are looking at this, it's the trend that's important. And look, when crude oil actually flattened out, the SPY went on its own way, merry way yesterday from about 12:30, 1 o'clock to the upside. So I just wanted to give this and show this is kind of what we're seeing right now. one of the things that I'm looking at, and what I've done with my subscribers, is that we only want to go short the indexes and the volatility index under certain conditions. At this particular point, I have to wait for two things. One is I have to get the exact timing for the reversal of the market. I don't know if I'll be able to get it this time. I'll tell you why. You see the way that United Technologies, you see the way the flat stochastic at 90% and the MACD is still expanding. See how strong the weekly chart is? Let me just go to the Dow. And there was a question I had, a really good question from Paul saying, hey, the Dow 50 moving average and did he say the 100? And the 200-day moving average have crossed positively. Now, it doesn't really matter whether he's using the exponential or the simple. Let's just say that he's got it crossing. I'll show you right now where it is in the daily chart. This line, I believe, is a 200. Let's see. So the 50 will be, I had it just a moment ago. Let me go to this chart right here. This chart right here. Is that it? No, that's not it. I got a lot of charts. Let me go to this chart. Oh, there it is. This chart right here. This is the daily, and we're going to go to the Dow, IND. First of all, this is the chart that you're seeing right now is the transportation index, the IYT, and it's in leg C to the upside. Should still go to a D, but it has got this double top that we're looking at 145.85. So now I'm going to go to the Dow, INDU. And look, here is, I hope I got that right. Yeah, so there's the 50, and it's crossing the 200 period moving average. And the question was, we saw this in December, right there. Are we looking at a match? He knows I love to look at matches, and there was a crossover right there. And yes, we had been starting to come down when it happened, and then the market tumbled into that whole January fiasco. My contention is that when moving averages cross, you'll see a lot of news media, you'll see a lot of signs, and they will say, oh, the 50s crossed the 100, or the 50s crossed the 200, or the 9s crossed the 50. I look at that and I say, that is always a belated move, because you're looking at periods of 50, really going back, or 9, whatever it is. It means just one thing. It means that it's crossed over, and from that period on, you've got to be very aware that very often, after a long period of disparity between two moving averages, when they come together and they don't deflect lower, but instead, or higher, instead they cross over so that they inflect higher or lower. They don't deflect away back to the previous trend. That's saying it's a good sign, but now you've got to be a little bit careful, because the effort in doing that sometimes means that you have to have a retest of those moving averages. I don't see a retest right now, just as we're speaking at 11:24 on the 20th of April. But I do see that the 9-period exponential moving average, that purple line, let me see, yep, you can see it. I'm going to make it bigger. Right there. Is still very strong. And the price hasn't touched since the Dow broke above it on the 12th of April. The Dow has come fairly close, but not even touched that red line, which it very often does once it goes up. But when it starts to stall, you've got to look to see how the stochastic and other technicals are faring. Here I've got this gray line, kind of beigey gray line, which has said that every time it is underneath from that moment on, right there, on the 19th of February, when it went underneath the maroon line, the 9-period moving average, the market kept going high. In this case, the Dow kept going higher. At this particular point, it's quite still far away, and it would take a slide of the Dow to the 17,900 level, which is the 9-period moving average, and probably a close under it to start this gray line to go above and then to be putting pressure on the downside. There was a real good chance, I thought, that it would start to happen right there on the 18th, and it didn't. We did go down, but then you ran up and closed higher. So this is a very important moment in that, now I'm going to go to something else, in that the weekly chart shows absolute strength. Look at that candle. And of course, this is just this is halfway through we're not even halfway through the week. We're almost halfway through the week. And that candle's still looking great. So there's the music. It's going so quickly this morning. There are a couple of things I really want you to talk about in relation to what we're doing right now. Okay, I do want to do that because I want you to see this W pattern that's forming, and why it's saying to me I have this dichotomy between the relationship of the sectors. I'll be right back. Dow's up 43.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I had a couple of questions. I'm going to get to those questions. Let me just finish this because I think I want to get bigger pictures. I want to show something that's going on here, and one of the, why I'm having a dilemma in the sense that I don't know whether I should even think of shorting or just get my mind focused on buying a retracement, even though, there's talk and chatter about a very serious decline. Look at the weekly chart of the XLF. The MACD's expanding. The stochastic's holding at, what is it? Why does it say 37? That's not right. Oh, I don't have the number for the stochastic. Oh, That's what happened. I added something. I'm going to take it off. Let me just get rid of it for just a moment, and then I'll have everything back again. Analysis techniques. Let's go. Where did it come from? There. So we'll just for the moment just put status. Okay, gone. All right, there we are. No, that was wrong. All right, that's not very good. Let's see, make that easy language. Edit alert. Oh, I need it. So let me do this. I'm going to go to, just for now, on balance, alert, format. No. So what we're looking at here is I went and messed up this chart. It was just great. And now I'm going to do this just for now. Easy language, format on balance. Just for now, I'm going to say, there it is. Okay. So I'm going to just put here format, no, cancel. This is just wasting valuable time. All right, I wanted to show the stochastic and it's not working. And this is exactly the chart that I wanted to use. So I'm going to do this right there. Just for now, I'm just going to get rid of this. And I'll put it back on during a break. Format, and I'm going to say get rid of. Ease remove. Disable. That's all I wanted. Okay. Now I'm going to go back to this, and I'm going to put stochastic, disable, and there it is. Got the MACD. I'm going to add back the stochastic because I did want it. It was very important and part of what I wanted to look at. Slow stochastic. There we go. Okay, everything's back again. Yep. So the stochastic, whew, that was a trial. You've seen that the stochastic is rallying strongly. It's a 73% in the weekly. And this is only leg B. Yes, it can fail. And we're only halfway into the week. But look at the histogram, these vertical lines. That to me is still very good. So I'm looking at it and I'm saying, we've rotated. So even if you got your pullback in United Technologies, Triple M, which are now just they're in rarefied air territory right at this moment. That doesn't mean they have to crash. It just means that they need maybe a 2% or 3% pullback. That's what I'd like to look for. But look how important this is. A key sector is moving nicely to take the place of anything that might turn down. Look at the USO. This is the weekly chart. No fantastic strength yet in the actual price, but the MACD is good and the stochastic is rising. And it says if the USO, which is the United States Oil Fund, can get above the high of the week of the 18th of March, then all of a sudden we're looking at 10.80. If it goes to say 11 something, all of a sudden you've got your left side 1142, the high of the week of the 8th of January as a target. So a lot of work needs to be done. But so far what we're looking at is if we get that rotation, then some of these oil sector stocks, look at the action in Exxon. This is now leg A, B, leg C, and it's gone above the 200-period moving average. The MACD is good. Stochastic is flat. I love it when it's flat in the 93% area. Look at Chevron, CVX. Going to its 200-period exponential moving average. It's a little bit ahead. It's in A, B, C. It's in leg D. But the MACD is good. The stochastic is at 96%. And that's why I'm now rather hesitant to pull the trigger on the downside, even though I do expect there's some kind of a consolidation that we're real close to in some of the sectors. Look what's going on in the IBB. The IBB is at 280.14. It's only up 61 cents. It used to be a leader, and every time the market actually showed even an eye blink's worth of strength, the IBB was up 5, up 10, up to. But for the last year, since July of last year, where we got our sell signal, and we were short just 7 or 8 points from the exact high, took a huge profit, 111 points, and we're back in short. But nothing's yet in gold to say that it's going to go down. I think it's going to have a lot of trouble trying to break out. But look, the MACD is crossing positive, stochastics moving sharply higher, and you're seeing no strength at all in the price. That means that when this runs out, the technicals run out and starts to come back down, you might see a deeper decline in the IBB. I think it's just trading between the top of the band in the 287, 88 area, and then goes to the bottom of the band to the 255, and then keeps bouncing up and down between that. At this point, and at some point, it's going to break to the upside or the downside. So that was one of the great sectors. But have a look at this. So you've got the IYT, which is the transports. Nice week so far. MACD is huge. Look at that. Look at that expansion. Look at the vertical lines, the on-balance volume. This is the 0% line. This is the histogram, it's called. And look at the stochastic at 88%. This is showing strength. And I love to see strength in the transports. It doesn't matter which sector's leading, whether it's the truckers or the rails. But in this case, I think it's the airlines. Look, the airline index is trading at 96.13, the XAL, and that's in A, B, leg C to the upside. There should be a D because it's broken above the previous arch high, and it's closed once. No, it hasn't. It needs to close above 94.87, and right now it's at 96.13 on Friday, and that'll say, great, nice move. Now you can look for the next higher bar of 98.32 as a target. So leadership is really good. So I think we could be stumbling and stalling a little bit here in some of the former leading sectors. And that allows other sectors to take over. Question in the den. Basil, any issue with the Dow Jones, the SPY leading this rally, NASDAQ and small cap lagging? Oh, I was just about to get to that. Very good point, because my next thing would have been the IWM. And the IWM is lagging in the sense of price. But actually, when you look at it, it's only had 2 weak candles, and those weak candles held the 9-period moving average, and you've got this greeny brown line now underneath the red line, the maroon line, under the 9 EMA, which is suggesting that there's upside support for the IWM. So we might see, I'm going to put this onto a daily now, the same chart on a daily. Stochastics at 92%, MACD's moving higher. It's not, you see, this is just walking the 9 EMA. It's sort of hovering above it. It's not really bouncing. And that says to me that the IWM and the NYA.X, the New York Stock Exchange, were the weaker links. Now what you're seeing is that the New York Stock Exchange, thank you for pointing this out. I would have forgotten it. I had it written down that I wanted to do it yesterday, and I forgot. I think it's worth talking about the New York Stock Exchange. I'll be right back. Basil Chapman, Dow's up 46, S&P's up 4. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. I can't remember. I must try to start off the session with this chart. I thought I did, but I think maybe I just showed it in the den. This is the 10-minute E-mini, and it's made that cup formation. And I had what I call a phantom peak. I use that when I'm trading in the futures because it trades in 25-cent increments. So, it could have been a 0.13. So what I use is sometimes I use a phantom peak. What I showed in the den earlier this morning at about 7 o'clock was that it had gone to a peak A, a B, and was on its way to a C. And of course, it's called a floating letter. That C keeps moving until it makes a peak. But at the same time, just a little later on, I didn't send this to the den until later on when I did my show. I used a phantom peak, and that double top right there at 2,088.75 at 340 and then 350, the same thing. That is a pink A or red. I call it pink because it's just alternate colors. And that becomes the B, that becomes the C, and that becomes a perfect D. And the reason why I've done that over the years is that when my eye and the chart formation says that what's looking like a C really has all the characteristics of a D, I've got to go back and see if there's a phantom peak that I can use. And then what that does, it says, hey, you don't have to wait for the D. You can get out or tighten your stops, because if it really is a D, peak D is where in the Chapman wave you expect deeper corrections as possible, you're out. You can rethink it, and you've taken your profits. It then goes to a D, fine, you're out of it, or you can have different positions, but you've really cleared the deck. You know exactly what you're doing, and you've covered yourself in terms of money management. Well, it plunged to the 200-period moving average, and it went from 2,098 down, round number, to the 2,089.50 level. That's a huge move down. And then it had this incredible single leg up to the upside. And now it looks like it might have, in the formal tradition of way of doing it, made the D. So now I keep this as a D, and I say, but wait a minute, this could be a brand new leg A. That's where I would like to bring in the technicals and all. But in the meantime, it could go high. It could still go to an E and an F and then turn down. But my thinking here is that the Dow itself and the S&P are going to lag a little bit here as some of the others play catch up, and you get this rotation. And that's the whole thing. The gist of what I wanted to do today was say the finger gets wagged over here, but watch the finger on the left. And that's really the case. So that, look what happened yesterday. I had a call about, I had a question about Goldman Sachs. Is it now moving up? I said, yes, it's moving up. And if it breaks out, I might have to call it FB, and it'll become a B if it's really strong and the MACD stays. I think this is now in play. Goldman finally is fire. Geez, how long do you have to wait for the thing to become a leader again? Maybe it's a leader, but I'd say the XLF really is the thing I'm looking at. And I had a call about the KRE. XLF is the S&P Select Financial Spider. The KRE is this is the regionals. This is the SPDR S&P Regional Bank Index. So, and that's moved up. I'm inclined to think because of the MACD and stochastic so strong, this is really a B. And that means we could see some more upside, maybe not as a quicker move in the Dow and the S&P, but perhaps we're looking at the different sectors, and because there's so many financials, there's American Express, Visa, Visa, and MasterCard. Plus, you got JP Morgan. You got a lot going in the bank sector, in the financials, I should say, in the Dow. And even though they're not a major part of the percentages, Visa's like 16, 3.06%. I'm looking at it and saying, and Goldman Sachs actually is number 2 at 6.17%. Thank you, Peaky and the Dent, for that information. Yeah, this is important right now. What's going on in this rotational correction? It's unfolding as we speak. There's a kind of a correction going on. Some of the instruments. Oh, what happened to Coke? Coke earnings today. I had a PKF a few days ago. I was thinking that we should put it as a short, but I didn't. Oh my. A 47.13 I put, and then I completely forgot about it until I saw something this morning. Somewhere I saw that Coke was earnings. That's right, earnings. So it's disappointing, and this is a leg E in the weekly, perhaps a peak E. See what I mean about the rotational correction? So this goes into the financials. Let's look at J&J, making a leg F to the upside. Yeah, it could be getting a little tired here. J&J, Johnson & Johnson, maybe it's going to have a little bit of a rest as some of the others in the Dow move on. BX was a question. Yeah, BX is a little bit, it's already had a big move. It's broken out. It's in leg C in the cup, Chapman Wave cup and ladle. So it should go to a D. I'm not sure it's got quite as much power. My favorite, actually, I'm so sorry we don't have it we've had it periodically, but we don't have it now, was Bank of America. Gave a great buy down at the 13 level, and I never got it. Is at 1474. Maybe it's still not too late. I think this is showing much more energy, Bank of America. So, okay, I got that. I wanted to talk about the rotational aspect. I also want to do, X is getting tired. X is right now, if anyone has United States Steel, and you've got that fantastic profit in it, I'm going to suggest take a little bit off. Take a third of your position off. Try to plan to put it back. Have the patience in the 17.5, maybe even 1680 area, 1650 area. Just have patience. You don't have to rush to put it back. You had a fantastic gain. It just needs a little bit of room, like the SLX. See what I mean about this whole rotational aspect? SLX Steel Index. Gee, I can't believe this. We had this as a buy, and even recently I wanted to put. These things move so quickly. Look at that. You had 1, 2, 3 gaps. You would have thought that a 3-gap play would have given a big pullback in the steel market vectors steel fund. And no, it screams all the way to the high today of 30.50. And look at this leg C up. I've got a left side, right side price time match to the gap, that whole gap area in the 3150s. And that should be by within a week. Unbelievable. So, okay. So that's what I wanted to talk about in terms of the rotation. And that, in essence, is saying to me, I'm going to go back now to what I was talking about, because that's really the crux of what I wanted to do today. I wanted to talk about the dilemma I have in terms of the indices and what should have been a perfect moment to start a decline. But in fact, we've got a Chapman wave, almost like a Chapman wave squash in the MACD and stochastic in the weekly chart with that W formation. And this is showing tremendous strength in leg C. And there's a real good chance. Let me just see what's the high today. It's broken that. All right. There's a real good chance that we're going to try sooner rather than later for the all-time high of 18,351. That's really what I wanted to say. And I don't know what to say. We should have pulled back to the 9-period moving average based on the way the characteristic of what was happening right there a week and a half ago. Last week turned out to be a really good candle. It helped the MACD. Stochastics at 94%. Yes, you have turned down when you've been at 94%, but not when you're flattening out. So this is a very important week. If there is a turn down for whatever reason, news, you see, the way sell modes work, you've got to get the market moving down with news that is perceived as bad, and the volatility index has to scream to the upside. I got this ringer going off. I don't even know how to stop it. I mean, I know how to stop it. I don't know how to change it. All right, so the VIX is at 1267. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So a question I got, a couple of questions that I've been answering. This one here is about the OIH. The OIH is in leg C above the 200-period exponential moving average. It's in leg C in the weekly. The OIH is the S&P, the market vectors, oil services ETF, looking very strong here. And then the next question to go with that is, how's SLB, Schlumberger, looking? And Schlumberger is in leg C in the daily, leg C in the weekly. Yep, these both look very, very good. What would I do if I wasn't in it and I just felt I needed to be in the oil sector somehow or other? I would do one of two things. I would either, even though it's at a high, it means that you have to buy much less. You could nibble on the OIH right here at 29.05, saying, hey, I'm like a 80 cents to a point and a quarter, a little higher than what I'd feel comfortable with. So you're going to get a much smaller position. And because it's leg C, and on a move like this, it should go to at least D in a Chapman Wave cup and ladle breakout pattern, it suggests that you could get a position, preferably still in C, without making a new high. And I would say you could nibble right now at 29.06. This can't be your full position. Well, maybe you'll look back and say, man, I should have had a full position. But I'm just saying, for money management, you can get a small, whatever you were going to get, you've got to get less than you were. So you get a position here, but your real opportunity is if it gives you a chance in the next week and it pulls back towards 28.20, 27.90, somewhere in that area, it should start to make a leg D up in the weekly chart. That's where I would add a bigger position. And I'd even be prepared that if you add the position and then it breaks above the high of, say, today's high is 29.15, if it breaks above that high, then you can even add another position. But I would rather add, your plan has to be to add on the pullback and then maybe add on strength. You got to realize leg D is where you're going to be, got to be a little careful. And the 200 period moving average at 28.63 is going to be a magnet for a little while. Just realize that. So plan around it. So any position you got now is a position saying, I'm pretty sure it's going to come back quite a bit to today's low at least, which is at 28.45. And below that, I'd like to add some, and that would be your position. Hope that helps you. So we're about to break and we're about to wrap it up. You're going to go for your swimming lesson. It's Wednesday. You're going to go for Steve Rhodes. Great shows coming up. You're going to go for Dave White and Tom O'Brien at 3 o'clock. In the meantime, check out my opening call. I think you'll find it very interesting. And we are planning. We've got two positions that I think, I don't know, they're going to turn out to be like our dividend stock, which has turned into a longer term position. I'm hoping that these two that we've added in the recent weeks and are doing nicely now are going to be longer term. So there's plenty of time to get in. So there are positions, and we will do some shorting. We already are short, and so far the one is, working out quite nicely. So here we are, and we're about to wrap it up. Let me just say the VIX index, let me tell you, in the 12s, that's just showing buying pressure. It doesn't have to be big buying pressure. It just says you're not getting your selling yet. If by the end of the day there's a sudden reversal and the VIX goes from 1270 up to about 1330, then you might see the pullback, and then tomorrow could see another pullback. But in the meantime, I think the down the S&P are resting a little bit, even though they're up. I think they're resting. I think that the IWM, I didn't look at the Qs. As we're wrapping it up, I'm waiting for the music. So the QQQ series, holding very nicely, holding the 9-period moving average, especially after the Netflix debacle yesterday, holding the 9 EMA. That's all I can say. I would say that at 109.50, it's at 110.97. 109.50, something else is going on with QQQs, and they'll decline deeper. But I can just tell you this, they're holding like the general market right now. It's just a kind of a holding pattern as it decides which sectors to move deeper into and which sectors are going to have a bit of a pullback. We're on the cusp of some kind of digestion. Is it short term? Is it deeper? I don't think it's too deep, but we'll see what happens.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.